Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way.
Yeah, and we have a really fascinating topic today.
We absolutely do.
hmm
So, what if I told you that the greatest threat to the money sitting in your checking account right now, it isn't, foreign bank collapse, and it
Yeah.
isn't even a traditional hacker syndicate.
Right.
The real threat is actually a piece of code that literally taught itself how to pick digital locks.
Which is just wild to even say out loud.
It really is. So let's picture the scene. It's this week,
Yeah.
right in the heart of Washington, D.C. Behind closed doors at the Treasury Department, there's this highly unusual, incredibly urgent meeting taking place.
Very urgent.
Yeah. You have the Trump administration's Treasury Secretary, Scott Bessent, sitting right alongside Federal Reserve Chair Jerome Powell. And sitting across the table from them
Yeah.
are basically the absolute heavyweights of American finance. I mean, we're talking the top CEOs from Citigroup, Morgan Stanley, Bank of America, Wells Fargo, Goldman Sachs.
All the big players.
Exactly.
Yeah.
Interestingly, Jamie Dimon from JP Morgan Chase was actually missing from this particular gathering, but still, the sheer concentration of financial power in that single room is just staggering.
Yeah, I mean, it's the kind of room that, it doesn't just assemble on a random Tuesday afternoon to chat about quarterly earnings,
Right.
right? Or to tweak interest rate forecasts.
Obviously, yeah.
When you see the Treasury Secretary and the Fed Chair pull the leaders of the largest consumer and investment banks into a closed-door session, it indicates a mass systemic vulnerability. I mean, they're looking at data that threatens the actual foundation of the economy.
And that is exactly the mission of our deep dive today.
Mm.
We really want to unpack why the government essentially just pulled the fire alarm.
Yeah.
Because according to the latest analysis coming out of Washington, the entire narrative around artificial intelligence has completely fractured.
It really has.
Like, up until a few days ago, Wall Street was selling AI to everyday investors as, the ultimate corporate cheat code. It was this magical way to automate paperwork, slash customer service budgets, boost profit margins.
The ultimate efficiency tool, basically.
But now the government has suddenly realized that this very same technology is actually an existential systemic risk to the American financial system.
Exactly.
So if you are an everyday investor managing your own portfolio, you really need to understand how this changes the security of your money and, well, how it rewrites the rules for tech and banking stocks entirely.
Yeah, to understand the sudden panic in that room, we really have to look closely at how financial regulators are fundamentally reclassifying generative AI.
Right.
They are completely stripping away that label of efficiency tool that you just mentioned. Based on the latest regulatory data, AI is now officially viewed as a critical operational risk.
And when we talk about operational risk in banking, just to be clear, we aren't talking about, a bank making a bad bet on a mortgage portfolio or something.
No, not at all.
We're talking about the actual physical and digital plumbing that moves trillions of dollars every single day.
Yeah.
We're talking about the payment processing networks, wire transfers, the authentication systems that actually verify you are who you say you are when you open your banking app.
Precisely. And the scary thing is, banks are uniquely, almost dangerously vulnerable to this specific kind of technological threat.
Because of how old their systems are. Yeah.
Yes,
Yeah.
exactly, because of how their infrastructure is built. If you peel back the slick modern interface of your mobile banking app, you don't find a beautifully engineered unified system back there.
Right.
You find literally decades of technical debt.
Yeah. People assume banks have the absolute best technology in the world because, well, they have the deepest pockets, right?
Right, you'd think so.
But the reality is that the core transaction databases at most of these major financial institutions, they're running on incredibly old programming languages.
Oh, yeah.
You have code written in the 1980s or 1990s, and it's stitched together with massive, super messy customer databases, and then connected to hundreds of third-party vendor applications.
It is a sprawling patchwork. And, the problem with technical debt is that the original architects of those systems, the people who actually wrote the code, they are often long gone.
They retired 20 years ago.
Exactly. The current engineers are just maintaining the outer layers. So regulators are realizing that while human hackers really struggle to map out that massive convoluted maze of old banking code, an advanced AI model can just ingest millions of lines of legacy code in seconds.
Wow.
It can map the entire architecture, track all the data flows, and spot the microscopic logic gaps where two old systems don't properly communicate.
Okay, so it's like, think of it this way. It's like deciding to upgrade your home's front door with a state-of-the-art biometric smart lock.
Right.
You feel totally secure. But then you realize your house is built directly over a forgotten network of interconnected dirt tunnels from the 1800s.
That is a perfect analogy.
Right, so the AI isn't trying to break your fancy new smart lock on the front door. It's just instantly mapping all those old dirt tunnels and crawling right up through your floorboards.
That structural analogy hits the exact mechanism of the threat perfectly. I mean, the AI acts as both an exhaustive map and a high-powered flashlight for those tunnels. The velocity at which system vulnerabilities can be identified and exploited has literally shifted from months of human trial and error to just a matter of minutes.
But wait, I have to push back on the timing here a little bit.
Sure.
Because Wall Street analysts and tech executives, they've known about AI's ability to read code for over a year now. We've all watched models write software, debug websites, automate compliance checks.
Yeah.
So if the underlying nature of these banking systems hasn't actually changed, and AI's basic coding ability has been public knowledge, why is the Treasury Department pulling the fire alarm right now? Like, what specific catalyst triggered this emergency meeting this week?
The catalyst is a profound leap in capability from one very specific AI model. It fundamentally alters the entire offensive and defensive balance of cybersecurity. We have to look at the data surrounding what happened on April 7th.
Right, the Anthropic release.
Exactly.
So look at the technical documents. On April 7th, the AI company Anthropic released a brand new model, and they named it Claude Mythos Preview.
Yes.
But what's really crucial for you to know as an investor is that this wasn't like a consumer product launch. You can't just go to the App Store and download Mythos on your phone to help you write an email.
No, absolutely not. Anthropic heavily gated this release. I mean, the official documentation clearly states that this is an invitation-only model, strictly reserved for defensive cybersecurity research. They recognized immediately that what they had built was just way too dangerous for a general-purpose public interface.
Because Mythos isn't just good at reading code, right? The analysis shows it's aggressively capable of uncovering zero-day vulnerabilities.
Yes.
And when we talk about 0 days, just to define that simply, we're talking about the absolute holy grail of hacking.
The worst-case scenario.
Exactly. These are foundational flaws in software that the creators, whether it's, Microsoft, Apple, or Google, they haven't had a single day to patch them. Because they don't even know the flaw exists yet.
Right.
And the technical data says Mythos has proven it can autonomously identify and actually exploit these unpatched vulnerabilities across major operating systems.
And it gets worse. Furthermore, it doesn't just need open source code to do this. The documentation outlines its ability to reverse engineer closed source software.
Okay, let's break down the mechanics of that because that is a massive leap.
It really is.
Normally, when you buy a piece of enterprise software, you don't get the human-readable source code. You get the compiled binary, right? Which is basically a dense block of machine language that a computer can run, but a human can't just sit there and easily read it.
Exactly. And decompiling that binary back into readable code to find a vulnerability is historically an agonizing, incredibly tedious process for human security researchers.
It takes forever.
Right. It takes massive resources and time, but Mythos bypasses that entire bottleneck. It can ingest the compiled program, understand how it functions, work backward to determine its underlying architecture, and then just isolate the weak points.
So, okay, it's basically like walking into a Michelin star restaurant, tasting this incredibly complex, highly secret signature dish, and then instantly writing out not just the exact recipe, but identifying that the chef used a batch of butter that expired 2 days ago and exactly how that expired butter will affect the customer's digestion.
Yes, then doing all of that in a matter of seconds.
That is insane.
It is, but the mechanism behind how Mythos actually acquired this capability is what truly terrifies regulators.
Right, because they didn't program it to do this.
Exactly. Anthropic explicitly noted in their technical white papers that they did not set out to build a master hacking tool. They didn't feed the model some specialized diet of hacking manuals or malicious code exploits.
So it wasn't trained to be a lockpicker at all.
Not at all. It is what researchers are actually calling an emergent property.
Okay, we definitely need to explore that concept because I feel like that changes everything about how we view AI risk going forward.
It absolutely does. An emergent property occurs when a really complex system develops a capability it just wasn't explicitly programmed to have. It happens simply as a byproduct of scaling up its general intelligence.
Huh.
So, as Mythos became exponentially better at logic, reasoning, and just understanding the general syntax of computer systems, the ability to spot security flaws naturally emerged on its own.
What?
Because, hacking at its core is just finding unintended logic paths in a system. And because the AI understands the logic of the code so deeply, the flaws just become glaringly obvious to it.
Man, that is a tectonic shift in the landscape.
Hmm.
We are dealing with an intelligence that is so fundamentally sound in its reasoning that it can invent entirely new ways to break into secure systems, basically without human instruction.
Yes.
It's really no wonder they locked it down.
Yeah.
I mean, if a tool that powerful can decompile enterprise software and find 0 days autonomously, you couldn't possibly release it on the open internet.
It would be a disaster.
Yeah, the moment it's public, every bad actor in the world has the ultimate skeleton key.
Which is exactly why the data shows Anthropic isn't releasing it. They're actively quarantining it through a very specific, highly restricted initiative.
Right, Project Glasswing.
Yes.
Based on the reports we have, Project Glasswing is an industry coalition formed by Anthropic, and it's designed specifically to defend critical infrastructure. They're essentially building a heavily armed neighborhood watch.
And you really have to look at the roster of this neighborhood watch. The analysis shows an exclusive club of tech and finance giants.
Right.
We're talking AWS, Apple, Broadcom, Cisco, CrowdStrike, Google, JP Morgan Chase, Microsoft, NVIDIA, and Palo Alto Networks, alongside about 40 other major institutions.
That is a massive lineup.
It really is. And to accelerate this defense shield, Anthropic is actively injecting $100 million in usage credits, plus another $4 million specifically dedicated for open source security.
The sheer scale of that capital deployment, that tells you everything you need to know about the perceived threat level here.
Oh, absolutely.
They are effectively racing to patch the global digital infrastructure before a model like Mythos gets replicated by someone with malicious intent.
Yes.
And that timeline is accelerating fast because of the geopolitical reality we are currently facing, right?
Exactly. The broader geopolitical context is just impossible to separate from this technological leap. If you look at recent joint reports from top-tier U.S. agencies, so we're talking the FBI, the NSA, the Cybersecurity and Infrastructure Security Agency, and the Department of Energy, their data indicates a severe deterioration in the cyber threat landscape.
Right.
And this is very closely tied to the escalating conflict in the Middle East.
Yeah, those reports specifically highlight Iranian-linked actors actively targeting U.S. critical infrastructure.
Yes.
And again, as an everyday citizen and an investor, you really need to know that this isn't just about, state-sponsored hackers trying to steal corporate emails or intellectual property.
No, it's way past that.
The agencies are warning about attacks on industrial control systems, specifically PLCs and SCADA systems.
Right. And the distinction between standard IT networks and operational technology like SCADA is absolutely crucial.
It is. Because when we talk about SCADA systems, we are talking about the actual physical hardware that runs the country.
Yes.
We are talking about the digital dials that control the chlorine levels at your municipal water treatment plant. We're talking about the pressure valves on oil pipelines, the temperature controls in manufacturing facilities, and the circuit breakers on the national power grid.
The things that keep society functioning.
Exactly. And the government reports explicitly state that these recent cyber incursions have caused real operational and financial losses. The digital attacks are actually manifesting as physical damage.
And that transition, from a digital intrusion to physical disruption, that is the absolute nightmare scenario for the Department of Energy and the NSA.
Right. But looking at this from the outside, it raises a massive logical question for me.
Okay, what's that?
Well, if local water treatment plants, regional power grids, and smaller supply chain manufacturers are the ones actually getting hit right now, restricting this incredible defense of AI to a coalition of giant tech monopolies like Microsoft and Google, it just seems entirely backward.
I see what you mean.
Shouldn't the local utility company in the Midwest be the very first one to get the Mythos shield so they can patch their own systems?
It's a very compelling argument, but distributing the model locally is structurally impossible without compromising the entire ecosystem.
Really? How so?
Well, if you hand the Mythos model over to a local utility company, you have to make the model accessible via standard networks or edge hardware, right?
Right.
The moment it is accessible outside a deeply secure environment, the model weights or its underlying logic can be intercepted, copied, or manipulated by those exact state-sponsored actors.
Ah, okay, so you'd essentially be handing the master lockpicker directly to the very people attacking the water plants in the first place.
Exactly. The quarantine strategy of Project Glasswing is really the only viable path.
That makes sense.
You keep the AI locked inside the fortresses of the major cloud providers, AWS, Google, Microsoft, and you use it to identify and patch the vulnerabilities at the root infrastructure level.
Oh, I get it. Because that local utility company is likely running its operations through an AWS or Microsoft Cloud environment anyway,
Yeah,
right?
exactly. Patching the top tier theoretically trickles down to protect those local endpoints. They just have to secure the foundation before the technology inevitably leaks or is independently developed by an adversary.
Wow. That really makes the stakes incredibly clear. I mean, the entire tech landscape has instantly pivoted from this massive productivity boom into a desperate defensive arms race.
Overnight.
Yeah. And this realization that AI is now an operational threat that requires massive immediate containment, it has completely fractured the stock market's valuation of software companies.
It has. The market data provides a really stark, real-time reflection of this shift. We are seeing a severe repricing of risk across the entire tech sector.
Yeah, I mean, if you look at the trading data from April 9th, the U.S. software sector just experienced an absolute bloodbath.
It was brutal.
The S&P 500 Software and Services Index was already enduring a pretty bad year, sitting down around 25.5%. But on April 9th, as this reality really set in, the index fell off a cliff, dropping another 2.6% in a single session.
Right.
And we saw major household name tech stocks take significant hits. Cloudflare, Okta, CrowdStrike, Salesforce, Adobe, they were all just pulled down in this massive wave of red.
And what is essential for an investor to understand here is the underlying mechanism driving that massive sell-off.
Right, because it's not random.
No, the market is not reacting blindly at all. It is actively pricing in two massive contradictory realities simultaneously.
Okay, let's pull those apart. Why are both productivity software and security software taking such a huge hit?
Well, first you have the sudden realization that autonomous AI models are going to render a vast swath of traditional SaaS software as a service completely obsolete. If an AI agent can just write bespoke code, manage complex workflows, and integrate data seamlessly without any human intervention, well, the business model of charging companies massive monthly subscription fees for rigid productivity software begins to collapse.
Right.
That explains the pressure on companies focused heavily on traditional enterprise solutions.
Okay, that makes sense. But the second reality is where the dynamic gets really complex, right?
Yeah.
Especially regarding that Washington meeting with the bank CEOs.
Yes. The market also realizes that this new breed of AI creates a desperate, unprecedented demand for a totally new architecture of cybersecurity. The legacy security systems are simply not equipped to handle an autonomous lockpicker like Mythos.
Right, so we are basically looking at a massive transitional period.
Exactly.
During the initial AI gold rush over the past year, the common advice for investors was to apply that old saying, right? Don't buy the gold mines, buy the companies selling the pickaxes and shovels.
Yeah, classic strategy.
So people went out and bought the chip manufacturers and server companies. But the reality of Mythos totally changes the investment thesis.
It does.
The smart money isn't just looking at the pickaxes anymore. The market realizes that the gold itself is highly vulnerable now. So the real premium is shifting toward the companies building the armored stagecoaches and the impenetrable bank vaults required to actually protect the assets once they are mined.
That is a brilliant way to put it, and that represents a massive shift in capital expenditure. To tie this directly back to Secretary Besson and Chairman Powell sitting with those big bank CEOs, the regulators are not going to politely ask banks to upgrade their system.
Oh, no, definitely not.
They are going to mandate it. Through stress tests and severe capital requirements, those major financial institutions are going to be forced to pour billions of dollars into AI resilience, zero-trust cloud security, and biometric identity management.
Which means if you are an everyday investor actively managing your own portfolio, your strategy just has to evolve. The naive phase of the AI boom is officially over. A year ago, any company that just slapped the letters AI onto its earnings report saw a 10% bump in its stock price.
Oh yeah, it was wild.
But moving forward, the true long-term winners aren't necessarily going to be the companies with the smartest language models. The most valuable companies will be the ones that hold the keys to data security, operational trust, and secure deployment.
Trust has suddenly become the most scarce and valuable commodity in the entire tech sector.
Really?
Yeah. If a company can mathematically prove to regulators and consumers that their infrastructure can actually withstand an autonomous AI-driven attack, the valuation is going to detach and skyrocket relative to competitors who are still relying on legacy defenses.
Wow. So just mapping our journey today, because we covered a lot of ground.
We did.
We started by looking inside an emergency, closed-door CEO meeting in Washington, D.C. that really signaled a fundamental shift in how the government views artificial intelligence.
Right.
We uncovered the mechanism behind that panic, an AI model named Claude Mythos that developed this emergent ability to autonomously decompile software and exploit zero-day vulnerabilities.
The master lockpicker.
Exactly. Then we explored why major tech players are quarantining this technology inside Project Glasswing to defend against escalating physical cyber threats to critical infrastructure, especially given the geopolitical tensions.
Yeah.
Finally, we tracked how this pivot from a productivity narrative to a defensive arms race triggered a massive repricing in the software stock market, fundamentally altering where the smart money is flowing right now.
It's a lot to take in, but it reveals just how inextricably linked legacy code, geopolitical conflict, and your personal investment portfolio have actually become.
Yeah, it really does.
But, if we take a step back and look at the trajectory of this defensive arms race, it actually leaves us with a pretty profound, unresolved dilemma regarding the future of our financial system.
Ooh, I am always ready for a good dilemma. Where does this lead us?
Well, consider the regulatory endgame here. If the government is now going to evaluate the stability of a major bank, not just by the liquidity of the physical cash in its vaults, but by the cyber resilience of its automated AI defense systems,
Mhm.
we are entering completely uncharted legal territory.
Right.
What happens when the autonomous AI defending the bank makes a critical, emergent mistake?
Oh, wow.
Imagine a scenario where a defensive model detects a really complex anomaly, and in its effort to quarantine a perceived threat, it instantly and autonomously locks millions of everyday Americans out of their checking accounts and mortgage portals.
This completely shuts it down to protect the system.
Exactly. When the dust finally settles on something like that, who is ultimately held legally and financially liable?
That is a huge question.
Is it the bank's CEO who authorized the purchase of the system, or is it the tech company that originally trained the model?
Oh, man. That entirely rewrites the concept of corporate fiduciary responsibility. And considering all the technical debt we talked about earlier, an autonomous lockdown like that isn't just some theoretical sci-fi plot. It's a very real possibility.
It is.
I guarantee you the CEOs sitting across from the Treasury Secretary this week are demanding answers to that exact question before they deploy these new shields. Well, that is certainly a complex reality to navigate as we watch this new era of the market unfold. Don't forget to subscribe and hit that like button.